Gabriel Abed is a technology entrepreneur, and were he just a bit older, I'm sure we would call him a serial technology entrepreneur. His background is in cryptographics and network security, and most significantly, he's the founder and CEO of Bitt, which is a Barbados-based digital currency, digital wallet, international payments platform that is based on blockchain technology. Gabriel?
So, Bitt, we're a financial technology and software development company located on the island of Barbados. And we were formed with the concept of looking at solving some of the systematic financial problems plaguing the Caribbean region. Some of those problems most of us in this room are well aware of. They've been known to us for several years. They range from high settlement times, and this is looking at wire transfers, which can take several days. Financial inclusion on unbanked citizens. The Caribbean touts a very high unbanked citizen rate, ranging well above 50%. The lack of banking infrastructure in the region and in most developed nations, like the Caribbean, we lack banking infrastructure when compared to developed nations. As a matter of fact, we're 25% of what developed nations have when it's in comparison to ATMs and bank branches. We face the problem of fragmented currencies across the Caribbean Basin and CARICOM. As a matter of fact, across 28 territories, there's 13 different currencies. Restricted barriers to e-commerce and innovation and payment platforms. One of the problems that we face in the Caribbean right now is that the cost to move towards innovation is extremely costly in the legacy payment systems, and it's seen as high risk with low reward, and therefore you don't see the legacy payment infrastructure systems moving into next generational innovations. High remittance costs. In the region, in the Caribbean, we face anywhere between 8 and 15% for remittances on the inbound. And these remittances typically range as little, in the inbound range of around, average of around $250. So what happens is a big portion of the remittance of money moving into the region is scraped off in fees. As David would have pronounced with digital fiat, the problem in the region is there's no open gateways or open payment standards, so that we don't have interregional standards within the payment or commercial banking infrastructure. And then, of course, one of the largest problems that we face in the region, which have been well covered by multiple organizations from Capri to ECLAC, is the issue of de-risking, which I don't think I'll go into on this topic. But one of the main answers, or the fundamental answer for a problem of this magnitude, is blockchain technology. Blockchain and distributed ledger technology is the only real solution to this magnitude because it suspends the needs for complicated correspondent linkages and makes all transactions transparent and traceable. Blockchain technology has some key characteristics in that it's a shared replicable ledger, meaning that everyone has the exact same copy of a ledger that they can prove is verified and integral. It's a distributed database synchronizing mechanism known as a consensus algorithm. What this means is that the database is copied to everyone that's running the exact copy of it in a synchronized fashion, and it's using a algorithm to verify the consensus of that. It uses triple ledger entry bookkeeping. So in accounting today, we know of double ledger entry bookkeeping where we have credits and debits. Well, in the blockchain world, every transaction, whether it's a credit or debit, has a mathematical signature attached to it, thus accomplishing a receipt for every transaction that happens on the network. Furthermore, it's publicly verifiable and it's immutable. What this means is that anyone in the world can verify a transaction occurred by viewing one of the open ledgers or blockchain listener, and it's immutable in the sense that transactions once stored, it's computationally impossible to destroy that transaction, thus avoiding the risk of forgery or editing or amending of the ledger. So some of the benefits of blockchain technology is that it's trustless. It allows for trust and verifications of all transactions committed to the ledger. It operates through a consensus algorithm, and it cannot be tampered with by a single individual or entity, which is kind of really important. We'll get to that a bit later. I've talked about the immutability of public transactions involved within the blockchain space. It removes the risk of forgery that fiat currency carries and eliminates the double spend problem. And it enables interconnected financial ecosystems. I'm going to talk a bit about Bitt. So Bitt's a financial technology company utilizing Bitcoin and other blockchain technologies to bring the world of digital currencies to the Caribbean basin. We facilitate secure peer-to-peer transactions with frictionless mobile money across a suite of software layers. Our services allow financial transactions to become digital, affordable, and openly available to everyone. So one of the things that we looked at when we were designing Bitt from the ground up over the years, and we've pivoted many times, was we realized that money is and the money base, physical fiat currency, is kind of akin to the product supply chain. When you look at how a product is created, a product goes through a manufacturing cycle, a distribution cycle, and a retail cycle. And when we looked at the money base, we realized that it's pretty much the same exact concept here, where you had central banking, commercial banking, and retail at the money base level. So what we did as an organization is we looked at a way at which we can solve some of the systematic financial problems in the region, and in doing so, we realized that we'd have to look at revolutionizing the entire money base. So what we did is we looked at we broke it down into 3 layers. Layer 1 was the asset issuance layer, layer 2, the asset distribution, and layer 3, the asset interface. At first glance, this doesn't look like it's very useful when aligning to the money supply cycle or the money development life cycle. But when applying it and looking at it compared to commercial banking, at layer 1, you have central banking, the point at which the monetary expansion policy occurs, the point at which money at the narrow money and the base narrow money level is created. At layer 2, you would have the commercial banks. These are usually your distributors, the guys that would interface with the digital fiat and ensure that it touches the hands of consumers. And at layer 3, you'd have the retail layer. So what we did as an organization is we built, on top of the blockchain technology, the ability for a central bank to issue their national fiat on this immutable distributed ledger. Then we allowed a commercial bank or a financial institution to access this digital asset and become a digital cash account provider. And then at the very bottom layer, we allowed consumers to access this digital cash via mobile money, mobile wallets, merchant processing systems, and payroll and payment software. So the building blocks of digital money. Digital assets are cryptographically secure tokens that hold a value and can be transferred between 2 parties without the need of a central counterparty. In essence, what we did was give the central bank the capacity to utilize Bitcoin's blockchain technology, its security, its transparency, and its immutability to issue their national digital dollar on top of this mechanism, thus accomplishing a cryptographically secure token, giving this token a 1-to-1 counterparty value with the Barbadian dollar. For every 1 Barbados dollar in existence would exist 1 digital fiat dollar. This capacity would allow a digital dollar to move from person to person without a counterparty or without a central party, meaning that we can accomplish true cash digitally. Bitcoin is an example of one such digital asset, and we've seen the peer-to-peer advantages of Bitcoin, but that technology can be built upon. It has specific functionality within the Bitcoin layers. I won't get into that, but OP return for those of you in the room that can appreciate that. Within that layer, we can store cryptographic data. So utilizing blockchain technology such as Bitcoin, Ethereum, or sidechains, we can accomplish a digital fiat currency. With blockchain-backed cash, the transaction is the settlement. What this means is that when I send a digital Barbados dollar from myself to anybody in this room or beyond on the internet, on this call, once that transaction has touched the blockchain, it is settled and it is cleared instantly. These digital assets open the doors to smart economies. So the mobile money impact on the global economy, I wasn't going to go through this slide. It wasn't part of my original presentation, but it does help. It looks at the fact that McKinsey did some interesting studies on it, on financial and digital fiat inclusion, and predicts that mobile digital payments could boost the GDP of emerging economies across the world by $3.7 trillion by 2025. Nearly 2/3 of this forecasted increase would stem from the increased productivity of financial and non-financial businesses and governments as results of digital payments. And we're talking about the frictionless environment that can occur from a digital dollar. The remaining third would be aligned to the financial inclusion of the unbanked and micro and small medium enterprises. And the Bank of England research shows that a central bank digital currency issuance of 30% of GDP against government bonds could permanently raise the UK's GDP by as much as 3%. The Caribbean Settlement Network, what we are trying and endeavoring to build by January 1st, 2020. Bitt is building a payment system ecosystem, a payments ecosystem to achieve a cashless society. We're doing this in Barbados to start. So we've talked about the 3 layers of the money supply chain. Layer 1, asset issuance. Layer 2, asset distribution. And layer 3, asset accessibility and retail. We're currently doing this on the island of Barbados and have been deploying things like the ATM, which have successfully allowed a user with mobile digital dollars on their smartphone to convert cash into digital dollars and vice versa. We've been working with the Central Bank of Barbados to produce this system, and we're moving now into a pilot and full production environment, moving away from the digital token to the digital legal tender. We're facilitating the digitization of the base physical cash with the Central Bank of Barbados. We're building a network of trust by creating a compliant environment that can protect its users. So while each user gets to have the advantages of digital cash society, we make sure we follow the compliance of a responsible banking environment. Every user follows a strict onboarding process that follows 3 levels of knowing your customer. So that every Barbadian that's onboarded through Bitt is KYC'd into the platform, verified with background checks to ensure that they're doing service to the system in a responsible environment. We're empowering a Caribbean settlement network through facilitating the Bitt technology by deploying a digital asset exchange across the region, allowing digital assets to be converted into national fiats. So for example, looking at Barbados, a person can transfer Bitcoin or other digital assets and have them instantly converted into dollars, Barbadian dollars. And doing this cuts the cost of remittance by as little as 1% or less. We're actively seeing customers come to our ATMs and our over-the-counter services on the island of Barbados with active service, and we're seeing a mass increase of mobile money adoption, of the ATM adoption, of the exchange adoption, and of the cryptocurrency adoption. And we're engaging every single Caribbean citizen through software design for the region by taking the stack of software that we have designed on the island and finding partners across the region to adopt that software. We have found partners in the islands of Trinidad, Jamaica, Bahamas, Grenada, Antigua, and we endeavor to complete this mission across the CARICOM and Caribbean Basin. To complete a Caribbean settlement network that would allow an interregional trade system to occur, that would allow bilateral and multilateral currency swaps to occur, that would allow a much more innovative payment infrastructure to occur in our region. I'm not going to go through that last part, nor that last part, nor that last part. Basically, what we're endeavoring to do is build a brand new financial ecosystem, looking at the 3 layers of the money supply chain, building those out digitally, and then transferring that technology across the Caribbean. Thank you.